you get through enough cycles, you can build a repeatable process. And so that was the great equalizer, I had to say, is we sat there and made a framework and decided if we find deals that meet these criteria, we're ready to pull the trigger, assuming we have the capital ready to deploy. Devoured content. And I listened to, at the time, upwards of 400 plus podcasts in an 18-month period. I got the bug so bad, Michael. And your podcast was one of the top of the list. I was really engaged with it. I was like, wow, there's a different way to do this. I read too many books. Flat out, I'll just say too many books, beyond the point of education into procrastination, right? It was like 24 books or something in an 18-month period. A little bit over the top. But then I was actually ushered into this is my last W-2 gig, and I left in 2019 ultimately. Very, very end of that year. I mean, at the same year you and I recorded that podcast, it was ahead of schedule. I was working at a fix and flip tech company lender. It was all those things in one. So I saw all these different investments that people were making, and we were helping them make them in fix and flips. And I was like, I can't swing a hammer. Like I hurt myself if I do that stuff. I'm not handy. Jennifer's more handy than I am. Not ashamed to say it. So all that to say, I was like, where's more predictability? Where's more forecastable, big, business plan, business operations style investing? And then I looked at, wow, let's go look up market. And then I found your education, frankly. I mean, I found your program. I remember purchasing the SDA. It was one of the first versions, if not the first version of the syndicated deal analyzer. Michael and I, by the way, didn't talk about any of this ahead of time. I didn't even tell me to say that. And I'm just sharing it because that's what happened. Like I bought the damn thing and it was super helpful and educational. And I was just deep down that rabbit hole saying, I want my money invested in something that produces cash flow better than $200 a month for a $430,000 purchase price. And even after buying turnkey rentals, we got it to a portfolio of 5 turnkey rentals in the Midwest, which was fine, better purchase price. $60K a pop is mind-blowingly cheap for someone sitting in a coastal market of any type. $250 a month in cash flow. So flash forward, we started investing in these bigger deals. And I was like, wait, I don't have to do any work. Don't have to even manage the property manager, which is semi-passive at best. Even I'm not against rentals overall, but I'll just say there's no such thing as a fully passive rental. We've since sold our rentals, except for that one first non-home run. It's appreciated, but beyond that, we came into a place, Jennifer and I, where we're like, this is a system. If we really plan this out, we can invest over time. So we started carving out chunks of 25K, 50K, eventually bigger amounts. We'd saved up money from our tech careers. And ultimately started to get some momentum. And one of the first deals that we exited full cycle was actually with a Nighthawk deal as well. And we were very pleased with that outcome. I mean, it was like a 3-year hold period, and over like a 2 point early, can't remember the exact, it was like 2.2 or 2.3 equity multiple in that period of time. Mind blown at that point. And we just kept on doing it, while finding ways to also add value to others too. Because I was sitting there going, I know so many people in my network, and I'm sure you do too, Michael, where they're still in that machine. I don't want to be derogatory. I had a great W-2 career and I learned a lot, great relationships, but my goodness, people hustling hard for years without an exit strategy of any type, dropping money into investments. And so I thought cash flow was key so we could de-risk our own lives and build a moat around our life.
Yeah.
Get more flexibility.
But yeah, in defense of so many other people, I had my money, my IPO millions with, Morgan Stanley at the time, right? And I was like, man, I'm gonna let the professionals handle my money, right? That's literally, I got the statement. I didn't even look at the statement every single month, right? And I think most people that have money to invest, that's exactly what they do. They hand it to a financial advisor and they think that they're actually looking out for them. And in hindsight, I'm like, holy cow. All he wants to do is churn stuff so he gets paid commissions. Like it's incredible. Now, so there's a lot of comfort and a lot of fear with alternative investments, which is syndication is an investment. How did you and Jennifer overcome that fear, right? Like in your mind, you had a conversation. Hey, we got some money to invest, and I don't know, maybe it's not the stock market. We should try some crazy stuff. Like, how did that go?
That is very much how we thought about it, right? The crazy stuff comment is making me chuckle because that's how we were sitting there trying to wrestle with it, like a lot of us, right? It sounds crazy, and you get the reactions from friends, get the reactions from family, and they say, are you out of your mind? And but it's just what we're all conditioned to do. I was so proud of my 401ks, right? I was so proud of dumping and maxing out money for years in 401ks. We'd sit there and celebrate those things. And I'm a big fan of frameworking. I think in our conversation back in 2019, we might have talked about this a bit, Michael, but I love being able to make smart decisions. Even better if you can make smart decisions with some speed, if you need to, and you have to sometimes, right? And in tech startups, that's what I learned from people way smarter than me, man. How do you framework it? So we put together like a framework for ourselves, for our own money, and we were like, if we find deals that meet this framework, and some of which inspired from the SDA and the teachings that I got from you and from your program. And we look at it like this: it's a 5-part framework. We still have these bullets now, but we've built out a lot more structure around them. And so it's, who's got the deal? How do you de-risk? Who's managing the deal? If we're not managing it like a rental anymore, who's managing the deal? Where's the market? And then of course the business plan. I didn't come up with those 3 buckets. The real meat is the 5 that we have beneath that, in my opinion. So we look at the track record, the approach, the team, the communications, and the values. That's how we got more comfortable. And I have a very nerdy spreadsheet beneath that, of course, with, breaked out with 70 plus questions and criteria. And just to give you a sampling of like the ones I think are most important to me and Jennifer, before we can really get comfortable with this stuff, was like same principles from entrepreneurship and tech. Failure response is kind of nerdy branding, but I like it a lot. It's like, has someone been through a really, really challenging time? If they're managing a deal, if they're going to be managing an apartment building, and I'm holding shares in a piece of this big building I couldn't buy by myself, like, have they gone through a really, really challenging experience and come out the other side? Because none of this is easy for the manager, right? Even if in a great rising tide market, I assume there's going to be hardship, there's going to be headwinds, there's going to be stuff. And so that, those are the kinds of questions we have to ask just to get ourselves comfortable with it. Of course, all the numbers. You got to understand how to read a spreadsheet, but like, really it comes down to that who, and like, are they able to go and operate, if I'm investing in a passive deal, with a repeatable business process? That, if I had to boil it down to, got the track record, sure. Anyone who's done something, whether it's me playing my hobby guitar, used to play more metal and punk rock back in the day, and now performing for my kids. If I'm trying to learn a new technique or learn a song, if I've done it enough times, 100 times, I've got a process to learn that thing now. Same thing goes, with an apartment building, way harder to do, such as you guys in Nighthawk, like, you get through enough cycles, you can build a repeatable process. And so that was the great equalizer, I had to say, is we sat there and made a framework and decided, if we find deals that meet these criteria, we're ready to pull the trigger, assuming we have the capital ready to deploy, And so I get excited to talk about it because I feel like it's been a labor of love getting it to the point where we can have confidence in it to that degree. But yeah.
What created you to build this framework? And then how do you get the right answers out of some operators to actually get them to admit like some of the tough failures, tough losses when you're interviewing them, so that you feel comfortable moving forward?
Yeah, I appreciate you asking that, Garrett, because that's like where the rubber meets the road, right? When you're getting to know any other human being, whether it's in business, life, whatever, I think it comes down to not hitting them with an interview or a job interview, right? Like, these are human beings working hard. I don't want to come in and say, is everyone prepared to answer my 70-point list of questions?
Yeah, exactly.
No one wants to get slapped with that verbally, right? I don't. I've been on both sides of the interviewing table in my prior life so many times. I know how it can feel. In the end, being respectful to the core in timetable, like if you ask for something, be reasonable, but also, if possible, try and get face-to-face with them if you can, even on a Zoom call. I mean, just like this, if we can connect face-to-face, even if it's virtually, build some rapport, get to know them, and then also show them an indication of seriousness in any way, shape, or form by like letting them know, your own track record as a passive investor too. I'm so proud to say, like, we've now deployed over 7 figures of capital into deals, and that's across a lot of darn deals. So it's not like we're doing it in abstract, purely just to kind of say, hey, hey, operator, hey, sponsor, tell us all these answers to these questions so we can never see you again. It's like, let's go build a relationship, ever deepening, but at least starting on that first call, just saying, here's what I'm coming correct with. Like, here's how we view deals, sharing how we view deals, sharing why we're asking these questions. And one other example I'll give you as well, Garrett, like is a question that has actually prompted us to not go forward with a particular sponsor. And it might feel out of left field for some folks, is that on values, it sounds all squishy. It's not squishy to me in the sense that it's really just more behavioral interviewing. Like if I'm going to say, tell me about a time when, those wonderful, terrifying questions that we've all gotten in job interviews at some point or another. If I'm asking a sponsor, getting to know each other, and I'm like, hey, like, what's your philosophy on tenant experience? How do you know your tenants are taken care of in that building? Like, and we walked away from one sponsor because asked the same question a few different ways and very nicely, and all that they would want to do was change the topic, and it was like, maybe for some people and it's absolutely fine if they don't agree with that. But I think making sure you give people the chance to answer in their own way, but eventually they do have to answer the stuff that really matters to us. And whether it's failure response, if they haven't been through anything really hard, like it doesn't even have to be from real estate. If they tell us about a time, like tell me about a time when you've been through something that where you were like, you thought you were about to fail out in a different entrepreneurship venture. And Michael, I appreciate you earlier sharing, your story from the food business, restaurant business. I mean, you better believe I would count that as a valid story.
You better.
I mean, come on. That's crushingly
Put
challenging,
hair in my
right?
chest, let me tell you.
Oh my gosh. The food industry is no cakewalk.